Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today is Monday, September 15th. Why is this not working? Let me try that again. Today's Monday, September 15th. One second. Let me just share my PowerPoint with you guys. The disclosures. There we go. All right. I don't know what. All right. Something went wrong with my disclosures. Wait a second. There we go. Sorry about that. Today is Monday, September 15th, 2025. And today's subject is AI stocks go back to work before the Fed. Um, Pretty much most things are positive as people look for a dovish sort of central bank policy. There are some other catalysts going on that are more fundamental and less simply macro driven. We're going to cover some of those. And I think the main thing in some ways is the fact that the overall AI trade really showed some comeback last week. Here are the standardized returns of some of the ETFs we're going to be talking about. Also, if you want to see the prospectuses and other important disclosures, those are included in the description of this video. You want to see those. And also, before we go on, I wanted to just quickly remind everyone that we are going to be speaking on September 24th, which is next week. Now, looking forward to this in Chicago at our masterclass called Derivatives in Focus. I'm going to be doing a presentation mostly about options gamma. If you're interested, this is the CME in Chicago. D Russell 100, DRUSSELL 100. That's the promo code that can get you $100 off your ticket if you're interested in joining us. All right, now, so if you're on tradestation.com, by the way, if you want to sign up for that, you go to tradestation.com, you go to learn, and then you go down to masterclass, and there's a link in there. But for this webinar, we're going to go down the page a little bit more, and we're going to look down here to the blog post. AI stocks go back to work before the Fed. This is the main sort of subject that we're going to be covering today. And so I want to just kind of also, point out some of the things about this that were quite interesting last week was that the NASDAQ had its first record close in almost a month. So what we really saw was we saw an overall kind of return to the way things have been. It's interesting in many ways. The market had been on this kind of small cap sort of value, small cap move, and there were some real signs last week of that kind of petering out. So I think right now we're at a spot where the fundamental story, earnings growth, and all those other things come back to the large cap growth area once again. And what's also interesting is we saw some of that spread to the nuclear energy utility stocks, the idea of data centers having a demand. I think that's interesting to see that coming back as well. So, the economic data overall is kind of continuing to point to a general slowdown and weakness, which is in some ways favorable for the growth trade. People are not going to be looking for cyclical growth. They're going to be looking for the overall, um, you know, um, earnings growth, secular growth, and also weak dollar. And those are some of the things I think are interesting. So you might want to take a look down here at the charting the market section. These are some of the overall things we're going to be looking at. So as I look overall, I want to just kind of quickly mention that last week, we saw technology, we saw communications, we saw consumer discretionaries all have record weekly closes along with the NASDAQ and the S&P. The Russell did not. Value stocks did not. Mid caps did not. So I think we're seeing something here that is trying to tell us something. And I think it is something of a suggestion of a kind of back to the way things used to be. This idea of there being a major small cap rotation, it might just be another one of these mirages that kind of fades as people kind of return to the thing that just seems to keep happening, which is large cap growth continuing to perform. So I think it was interesting as we look that in some ways, what we're seeing is that we're seeing the rate cut, the expectation of rate cuts, one of the last three meetings of the year, that is not really an event anymore. Now it's a condition. Like everyone knows the Fed is going to be, or I don't want to say everyone knows, but there's a unanimous belief, more or less, in the futures market that the Fed is going to cut 25 basis points. The overall expectation is 25 at this meeting in the next two. And again, it's one of these things now when there's not a lot of surprise. If there is going to be a surprise, it would be later in the rate cutting cycle when the question is, when does the Fed stop cutting or something like that? Does inflation come back? And inflation numbers last week were not terrific, but they're not bad enough to stop the Fed yet. If we get deeper into the cycle and inflation starts pushing much above, staying above 3%, getting toward 4%, that's a different ballgame. But we're not there yet. So right now, rate cuts and easy monetary policy is simply kind of a condition that's out there. The thing that's interesting is today also we saw the Empire Index weaker than expected. So we're seeing the cyclical weakness coming through, and that is also something that is not going to be great for financials, industrials, and things like that, and small caps. If the American dollar continue, the U.S. dollar weakens, and we see money moving to global, that's also not a good thing for small cap, and that is what we've been seeing. If I can really look over here very quickly on our workspace, key ETFs. Now, remember, I had a request for this workspace, and basically, it's very similar to the one I share on on um, on Thursdays in market trends. If you go back to our blog here, and I'm just gonna, if you just go to Market Insights and you go to the top here and you look at this blog post, this one here called, market trends on Thursday, we actually share a zip file in here, which has a lot of tools. And one of the things we share is a workspace that basically has all this information and actually a lot more. But the key thing, if we look like, for example, in the last, month, what do we see? We see, gold, we see metals, we see emerging markets, we see down here, emerging markets has really outperformed in the last month. And then if we kind of look today, this is actually, I turned this off about 15 minutes ago, but more or less today we're just seeing, what do we see? We see consumer discretionaries, which is Tesla and Amazon, communications, which is Alphabet, and then Netflix and companies like that. And then we also see XLK, which is a big tech. They're the leaders. And then down here, consumer staples weak, healthcare weak, materials. So we're seeing basically back to the way things used to be. It's interesting if you look in the last 3 months or so on the index level. Be interesting to actually see. You can see that the Russell has been outperforming the last 3 months and even in the last 1 month. But if you look in the last 2 weeks, you can see that it's moved back to the Qs and the Russell is sliding back down. So the value, we're seeing the shift back away from value. See IWF versus IWD. IWF is growth and value is, down. It's up less than 1%. Growth is up 4% in the last 10 sessions. But then if you look in the last a month or so, you can see that they were actually more evenly matched. And there was a period of time when value is outperforming growth, but that's not the case anymore. So we're kind of going back to the large cap growth theme. I do think one thing that's interesting, though, is in some ways, semiconductors are kind of blighted by various kinds of geopolitical risk. Today, China took some moves against NVIDIA. So now we have this kind of tit for tat of countries beating up on each other's chip makers. We're trying to block them from getting stuff. They're trying to do stuff to us back and forth. It actually creates a little bit of a risk here where semiconductors have some potential, I think, to maybe not enjoy as much multiple expansion in that environment. Instead, what we're seeing software come back. It's very interesting to me to see last week. This is Microsoft. Microsoft last week had its first positive week in 4 or 5 weeks. Palantir also came back with a positive week. So some of these large names, these software names have been coming back recently. So this could be something of a rotation back toward the software and less of a focus right now, exactly in the near term on chips. A lot of the chip earnings are out there. I mean, Micron has had a significant move, but again, all this stuff now, people may say this is priced in, and then things like the software is not necessarily priced in. It's been consolidating here for some time. Okay, so in terms of that cyclical trade, tomorrow morning we have retail sales, and that could actually be a big test. That could also kind of show if that shows weakness in the American consumer economy, the kind of non-AI economy. That would be something also that would not be great for the cyclicals, for the financials, for the industrials, for the retail. So I think that's something we have to realize here. And when you look at a lot of the, consumer sentiment last week wasn't good. All those things overall may point toward the risk of cyclical weakness, those job revisions, the consumer sentiment, the Empire Index today. All those things might suggest the cyclical part of the economy weakening, which then in favor which then in turn could favor the large cap growth. Um, Okay, and then I also want to mention that I'm noticing just that the home builders also kind of sputtering here. And one thing to me about the home builders is kind of interesting is that they are often, if you look at, for example, the ITB, the home builder ETF, really sputtering here. This thing often anticipates turns in interest rates, I've noticed. And so this could also be a spot here where we see yields move back to the upside from here. For me right now, the three big themes that I have like my three big G's right now. First is growth. The growth stocks like IWF, the growth, that's basically the large cap growth names, these big, this is essentially like the Qs. This is essentially the large cap growth. This is the area where there is starting to be an emergent growth, an emergent outperformance. There's a new breakout. This is one area people are focused. The next area is global. We've talked about the strong performance in global. We've talked about the weakening of the dollar. In fact, today we did a trading view idea on the euro. If you look over here at our trading view ideas, there is a link in the description. We did this article here about the euro breaking this kind of downtrend, and you might want to kind of check that out. That could be interesting as well. It's also interesting, I wanted to tell you that we did do a bearish or, kind of downside idea on Coca-Cola. And I want to just kind of point that one out because this trades a lot of options, low implied volatility. It's got some space here, maybe down to the downside. We're going to get to the XLP consumer staples. So I did want to mention here that in this environment, things like Coca-Cola, the consumer staples, it's a risk-on environment. Of essentially, if it's something like growth and it's risk on, consumer staples are often an inverse of that, and people might actually be looking here for the XLP to kind of work its way back down, getting under the support and working back down towards 76. Okay. All right, three G's. I mentioned growth, I mentioned global, and of course we have gold, which just continues here to kind of move to new highs. Gold, with that kind of including that silver. We also want to take a look at platinum, which we've talked about some, and this is something which is it kind of had this big move, and we talked about it at the time. We were writing about it way back here in early May. You can look on both Trading View and on Market Insights, we talked about what was happening in platinum. I mean, if you look at platinum long term, it used to be worth more than gold. Now it's worth half of gold or less. People looking for a long term kind of ratio may look for platinum to work here. It's not highly traded or very liquid, but it is something that could be people looking for some positioning or something that might outperform in the precious metal space. This might be something that people kind of bear in mind. Now, the other big thing I think is happening right now to a certain extent is that Tesla has, had a whole slew of interesting news. First they had Elon Musk, solidify his pay package early in the month. Then basically there was a kind of buzz I saw on Thursday, Friday about, oh wow, deliveries are coming up. They're going to have deliveries at the beginning of October. And again, a lot of negativity. If they're just not terrible, people might see that as being an upward pull. But then today we had news that Elon Musk bought another $1 billion of stock. And the other thing I think it's interesting is now I'm just kind of looking at different places, and it's more of an anecdotal sense, but there seems to be a growing awareness of EVs are kind of coming back as a global trade. Some of the Chinese EV names are coming up. I believe there was a European auto show recently when some of the Chinese EVs were present at them. And there's a growing kind of sense, I think, long term about electric vehicles are becoming more mainstream and more global. And I would say if you kind of think about it, say you're looking long term macro at the world, and you look at where's the growth going to be, there's going to be growth in places like Indonesia, Nigeria, Kenya. Those areas are the places with the growing incomes and the more rapid economic growth. Well, there's people there who overall, they don't even necessarily have the infrastructure of internal combustion engines and everything like that. Those areas could maybe see significant growth in things like Chinese names and things like that. So I think right now we look out into the future, we really could be kind of at the opening up early stages of EVs really becoming a global phenomenon. And I think that I'm getting the sense that that's in the background. Now, as part of that, it's also interesting to look at ALB. The lithium stocks have been kind of bouncing today. These guys have had a lot of different news, but this company has a lot of short interest. It has a lot of negativity in it. It's a member of the S&P 500. But we might want to look at something like some of these lithium names. If you look at this one on a weekly chart, ALB, I mean, it's really just significantly struggled. But a name like this over time, if it's a materials stock for one thing, it's something where, you know, rate cuts would not necessarily be a drag on it, and it's exposed to a secular growth area. So I don't know a huge amount about this, but it's been interesting to kind of see this thing come off the lows. The Chinese show price discipline on lithium, and then at the same time, the strength in global EVs. People might look at this as sort of a play on that. So I did want to mention that's a company probably not on a lot of people's radar, although there was a time when it was a highly active traded name way back here during the pandemic. Um, the other interesting thing today was that Google or Alphabet continues to, it continues to extend to the upside, which is a positive for the communication sector. The thing I'd say about Alphabet here is that basically you have a company that suddenly started having a lot of positive news coming through. They won that court case, and now there's a report that their Gemini is kind of outperforming ChatGPT on the Play Store, so that they're kind of gaining traction there. So I think right now we're at a spot where the world is refocusing on the future, long-term big growth, and things like Alphabet are in a position for that, Tesla in a position for that, um, and overall AI, especially after that Oracle report last week, and that's really interesting price action in the bullish note in a name like Micron last week from Citi. Another just couple things I want to really quickly mention before we go through each individual index is the fact that I think his name is Joe Krinsky. Krinsky, I just wrote down Krinsky, but at BITG, he's a strategist there. He thinks yes, he basically said there's a chance of the S&P 500 pulling back to 6,400 after the Fed kind of sell the news event. I'm putting my initial support, closer up here to 6,500. I noticed we bounced there last week. I noticed this market has not been very agreeable if you're looking for significant pullbacks. So that's where I put mine. But he basically says 6,400 is possible. And then RBC Capital raised its price target today. I'm looking for the actual details on that. I just started briefly, and I'm looking into that more. But it was interesting. I want to look into that. All right. So now if we look at the individual indexes here, I think we look at the S&P. We are looking at the S&P, and essentially here we have this kind of uptrend. And from my view here, along this line, um, I think as I look at this, the main thing that stands out to me is 6,500. I'm seeing this line go up that we're kind of sitting at, and I mean, in a very bullish scenario, this could steepen and go almost more vertical. I mean, there is the potential for that sort of thing to happen here. Last week, the sentiment from AAII was so negative. I can't believe the sentiment's getting worse as the market goes higher. And the other thing is the earnings have been just so much better than people expected. Nobody expected anything like that Oracle number and then what it has done across the tech space. So from my view here, there's a question where I think there's a lot of people thinking we're going to get a sell the news event on the Fed, but it might not, and it might actually turn into something when all those people who are waiting for 6,400 are like lucky to get, you know, much below, you know, 65.50 or so. And, so I'm just saying at this point in time, the first real support I'm looking at is 6,500. But as I look at this overall price action here, I think we also have to realize there are indications that this might not be a market that really wants to give a significant pullback. I'll also mention here that if you look at the S&P 500 daily chart, we've seen this pattern before when RSI just kind of goes up and stays up and doesn't go much below 50. And so from my view here, we're back up near the overbought condition. So that's another thing to kind of look at. RSI has been pulling back kind of toward 52, kind of under 60. So another way to think about the signal might not be the levels per se. It might be, does RSI go back under 60? And that's maybe where people get more interested as well. Now the Qs back on the weekly chart here on our trading view, what we can basically see here is the Qs have basically extended. And what was interesting to me is that last week, well, the week before last week, we had a bullish outside candle, and then we opened above the old range and stayed there all week. And so, from my perspective here, we had a period of time where large cap growth stalled. In many ways, I'm not sure if it started exactly with Microsoft, but Microsoft was emblematic of it, gapped up and just bleh. And now here it is, basically just 4 to 5 weeks of just nobody cared, lots of solid candles, just wait, wait, wait. But now here we are back in a spot where it's starting to kind of stabilize back above the 21-day exponential moving average. You can put the 50-day on here as well. You can kind of see. So I think overall, this is something where we're starting to see this kind of return to the large cap growth. And from my perspective here, Microsoft and Amazon and Apple are the names to kind of watch because they've been kind of just sputtering around. And these might be some of the names where people kind of look back deeper down into the index and look for some opportunities. So overall, the cues here, from my perspective, the place to be looking for maybe is a test down, kind of the 577. But even that might be pretty difficult to see. The Dow, um, it has essentially broken out here. I'm not really sure what to make of the Dow here. From my perspective, this is probably in an area where we'll follow the overall S&P. Um, it has kind of pushed to new highs. I'm not really sure how exactly to interpret this. I'll be honest. When I look at this index overall, I've had trouble kind of figuring out how this one is going to behave. It does have that kind of value aspect to it. From my perspective here, the real focus is likely to be on something like the S&P. The fact that this did not really really break out in a really decisive way. And today we have the S&P hitting new highs and the Dow is not. This kind of tells me that this is also something where it's not necessarily where the real strength is. The Russell here, my view is it's interesting to see it kind of trying to work its way to these highs. And from my perspective, that is something a lot of people do want to see. But I also think that there is a risk if we get to a spot here where there is that kind of pullback after the Fed. Um, there is a risk here that people start to kind of move beyond this look for this expectation of rotation. So for me, also again with the Russell, relatively near the highs here. I mean, if you look from my perspective, this is something people might want to look for. Maybe it gets a dive to the downside and then it reverses back to the upside. That might be more the way to look for it. But I think right now with the Russell, I don't see any clear signal on it. And in my view, the first really rational level to look for would be something kind of around the close from late August, which is kind of around 2366 on the Russell. Let me just fix my numbers here. Good. Now I'm going to remove these other things because this is all ancient history now. You have to be disciplined and keep your charts clean. I've one of these things I don't always do, so I'm just keeping straight there. Now the TNX, the treasury here, 10-year treasury. From my perspective, I've been kind of thinking there's a chance of it probing down here. Now my overall view is that we have risk long term of upside in the 10-year. My kind of overall view at the end of the day is that markets are made of supply and demand, and there's a lot of supply and less demand coming for treasuries. So, this definitely has gotten smashed down by the weak economic data. But from my view here, people might want to kind of see does it get very much below 4%? And so I'm watching this kind of tail here from back in late March and kind of looking for 3.9 up to 4 as being maybe the level where it kind of stabilizes. And so as I look at this now, from my view, the expectation of a significant downward move in yields on the long end of the curve, it might not really be happening. There is just ongoing sort of questions about everything involving the dollar, different things with American fiscal situation. This week we have a lot of the budgetary stuff coming up as well. So from my view here, this is something where there's nothing really clearly happening yet. It's not screaming to the upside to give us anything to be worried about. But at the same time, from my view, this is something where people might look for it to kind of just stabilize. So from my view here, the overall interpretation of this is that a lot of the drop has now happened and it may stabilize an inch higher. In that environment, the NASDAQ historically typically would do better than things like small caps. That is the TNX. Now, the dollar index, we did this euro trade, on this euro not trade, but this idea over here, the euro breaks the trend line. And I want to just kind of point out from my perspective here, this is maybe the most important chart to really be looking at because, I mean, from my view, I mean, there just seems to be space here. We've consolidated here for like 3 months. And with the Fed being dovish, the ECB being less dovish, things like Empire Index, payrolls, all that data being weak, this kind of rotation away from US assets, like we're kind of seeing outperformance of the global stocks, like we've been seeing, like I showed you before. At this point, it's interesting that gold has rallied and global has rallied, and the dollar has not. I mean, the dollar's moved down a little, but in some ways, you often see equities or derivative products. I don't know if the derivative is the right word, but related products will often move before the underlying asset itself. Like you'll see oil drillers rally before oil sometimes, things like that. In this case, we're seeing the anti-dollar trades rally, which is gold, global, things like that. Those are outperforming as the dollar sits. So what that could mean is it could mean that we get that kind of the movement could enter into the dollar index actually after the Fed, potentially to the downside. So, from my perspective here, the big thing to watch is this. And I would just say, I mean, normally you don't do anything with treasury with currencies that much. Of course, there are futures on these currency products that people can trade on TradeStation if they're interested in that. And one thing I would just say is the euro here, is in this very tight range. But the one that might really grab some people's attention is the Australian dollar. This is one here that has that China exposure. It's really gone nowhere for a while and people might actually look for the Aussie dollar to move to the upside, and that also would be kind of compatible with things like upside and copper miners and things like that. That's a dollar index. XLB materials. This has become such a weird sector because it has all these chemical and packaging companies and stuff. From my perspective, it's stuck in this range. My sense is, my overall view when you look at where things are with the Fed is that on a dovish Fed, this could break out and extend to new highs, but it could also get sucked right back down. This could very well follow what the Russell does. Um, the other thing I'll just mention about the TNX is the weakness in the home builders. I've seen it before. The home builders often move before Treasury yields. So the weakness in home builders could suggest upside in Treasury yields. I want to emphasize that again. XLB, I just showed you. XLC, raising the support on this one to 115 to the high from 2 weeks ago. I mean, we've repeatedly talked about the strength of this weekly chart, and it's very much in play here. After breakouts like this, people might look for just small kinds of, brief consolidation, 1 or 2 days down, kind of just testing back 3 to 4 days to the, into the past. Sometimes it's interesting not to look at levels, to look at how many days of time here. So you can see something rallies and then it basically goes back, I don't know, 8, 10 days and holds. So maybe if we have any kind of profit taking after the Fed, you might just look for it to go back, 5 to 10 days, wherever that is, and then retrace something based on time. We've often talked about the 9-day rate of change and how the index tends to stay positive for the 9-day rate of change. So sometimes simply letting that 9-day rate of change go to 0 or -1, that's the same thing as revisiting 9 or 10 days ago. See, so I don't have it on this chart. I don't, but I often look at the rate of change. So I don't have it on this one either. This is my daily chart of the S&P 500 from today's article, and we talk about how MACD is starting to, turn higher here and everything like that. All right, now energy here remains just essentially trapped. And I think that this has been basically propped up by some geopolitical stuff, especially this idea of maybe something happening with Russian sanctions and things like that. But overall, this remains in a very challenged place. And at a certain point in time, there is risk for this to work its way back down the range. XLE here remains in some ways one of the weaker ones overall. Financials also are a value area, cyclical area, kind of, sitting here. And my sense is, that they had a decent bounce last week, but from my sense here, I don't like. I mean, if you want to be bullish, I see some potential negatives in the fact that it basically inched to a new high and hasn't really been able to extend past it, while other parts of the market have. Um, this is, from my view, showing us some signs of kind of fatigue here in the financials, and financials and industrials. I've noticed in the last 2 weeks have suddenly started to really limp as the rest of the market has been strong. Industrials here, XLI, same way. I think that we basically see this kind of, empire index weak. If retail sales are weak, what does it mean for the GDP? I think overall here, this is something where, transports are in the XLI, and if we have economic weakness. So from my view here, this is something where I'm watching, and I see, my throat is not good today. But anyway, this has been kind of limping sideways, and from my perspective, there's a risk of this kind of on a period of, some weakness here, getting pushed back down into this range. First level I'm watching here is around kind of 146.80 on XLI. XLI and XLF really have been trading together though. XLK, on the other hand, had a record weekly close, and another thing I did want to mention, if you look over here on our blog, is we did an article about an options trade. So you might want to check it out in, what do you call it? Rigetti, RGTI, quantum stock. There's been some interesting buzz in these. There hasn't been any hard news recently. This is RGTI, but this is a stock that has had. There's been some buzz in some of these overall quantum computing names. This is IonQ. So this is also, I mean, it's an area in tech. What are we saying? We're saying tech. We're saying growth. These are not large cap growth, but they're growth, and they are, the kind of names that, have that kind of. They're not going to be susceptible. They're not as much economically susceptible the way industrials and financials are. These are pure growth names, and I don't fully understand the connection between quantum computing and AI. I mean, it seems to me like there has to be some connection over time. But I think the thing right now is it kind of independent of AI. Quantum computing has been quietly emerging as a technology for years, and it seems to be kind of entering its early commercialization phases. And there's like three or four companies that are involved in it. There was a bullish trade in RGTI. You might want to check out here. We did on Friday. XL. That's getting back to XLK. Let me look at the week really quickly, the daily of the XLK, because from my view here, you know, this is something where it might just people might just kind of look for it to probe down kind of to like 268 area. I would be looking at the high potentially from August 28th. This might kind of be our level, a level of people. I'm going to just borrow this line and move it up to there, roughly up there. That's pretty much, look for a probe maybe of the kind of August 28th high. What happens when things have these record weekly closes is they go up, they kind of grind and sit, and they kind of grind down a little bit for like 3 or 4 days, and then people buying that weakness are often rewarded. And so, from my view here with technology, like people, if people are hoping for a post-Fed sell-off or post-Fed profit taking of some kind, this might be the level people want to watch on XLK. And if you're not trading XLK per se, the idea would be that this similar things would apply to the Qs, similar things would apply to Apple or Nvidia and everything else, Microsoft. When that goes down and holds that level, it can give signals for other companies in the sector. XLP here, from my view, is just you know probably an area. We go to the weekly of XLP. Consumer staples, again, from my view, risk down to 76. We have a modestly bullish environment, and we have basically a sector that is pretty expensive. And I think when you look at some of these things, long term, I mean, some of these companies, they trade at really high multiples with not a lot of growth. And from my view here, consumer staples are failing to break out, pretty stuck here. And often when things get weak, when things are weak, they get weaker. They don't just suddenly come surging back to life. So this might be something here where people see downside in XLP back down this range that we've had in place really since last year, since last summer, or summer of 24. That's XLP. REITs, XLRE. I mean, this is something where I've been kind of watching to see if we do get sign up breakout up through 43. And from my view, people should be patient on this one and seeing if it can just kind of close above these levels and extend. If not, there's risk of this thing getting swept lower as interest rates, if yields do move back to the upside. Utilities, however, had a very interesting pattern last week. They had a bullish outside week. They probed this high that we've been talking about for many months at the 83 level. And from my view here, this is also something where some chopping is, possible here. But I think when you look overall, it's kind of interesting to look at the utilities. Look at CEG. We did a trading view idea on this last week. NRG, CLN, which is one of the newer names, which has really performed. And then another name is VST. It's also interesting to look at CCJ, which is Kamiko, which is uranium producer. These areas, there's something cooking here, so to speak, in the utilities, in the nuclear energy area. The thesis seems to be kind of coming back. So if you have an environment with a relatively weak US economy, but at the same time, interest rates are not going to go shooting higher, and you have the kicker of bona fide growth because of AI, it actually puts utilities in a surprisingly interesting place here, I think, and I think people are aware of that. And so, turning that old resistance into support at 83 on the XLU is something potentially interesting. XLV here, again, this is something where it's kind of stuck at this range. People might look for potential of a breakout, but right here, um, from my view, there's a potential of extending higher or kind of getting sucked back down. Doesn't give much of a compelling overall, risk reward one way or the other. So from my view here, I'm not really sure, but it just seems like it's in the middle of a range with no really positive catalyst. And, if the market does pull back, this is something people could really hammer and kind of send back to the downside. The overall healthcare industry as a sector has a lot of things that are, structurally just not as positive as they once were. XLY, consumer discretionary. From my view here, this is something where people might want to just look at this on the daily XLY. Again, kind of testing toward Friday's kind of close, maybe a little bit more, into this area around kind of 238 area might be where people are looking. But overall, this is something where now we actually do have this kind of breakout. The news in Tesla is actually pretty significant now, and I think that this is something where, when Tesla kind of gets this sort of trend underway, it can pull the entire consumer discretionaries higher here. So from my view here, we are actually now looking at a bona fide breakout in the consumer discretionaries. And this might also be something where it's kind of like tech, kind of like the NASDAQ, where a little bit of post-Fed selling potentially followed by some extension. So those are the main things I wanted to cover today. We will be back on Thursday for market trends. I hope everyone has a great day.